From euphoria to fear.
Fears about valuations in the AI trade weighing on tech stocks, all but one member of the Mag 7 down today.
Optimism to doubt.
Another day of tech underperformance on some concerns about AI growth.
Signs the market's turning on AI.
The last week, in terms of the shift from investors about how they think about AI and that overinvestment narrative really picking up steam.
Not just one headline, but 1,000 tiny cuts.
In September and October, debt issuance from just 3 companies was larger than all of tech debt issuance in the preceding 3 years.
Noted investor Michael Burry among the latest to weigh in, accusing some of the biggest tech companies of using aggressive accounting methods to pad their profits from the AI boom.
CoreWeave crumbling after last night's earnings report despite posting better than expected revenue. Shares dropped 16% to 2-month lows today. Investors disappointed in the company's revenue guidance.
I'm Deirdre Bosa with the Tech Check Take. AI anxiety on the rise. The AI trade is still the market's favorite story, but it's starting to show cracks. Skeptics like Michael Burry, the original Big Short investor, getting louder. His warning is that the AI build-out is being treated like a one-time investment when it's really a recurring expense, a depreciation tsunami waiting to hit the balance sheets of companies that are fueling the boom. Another famed short seller, Jim Chanos, getting in on the action too, throwing cold water on Anthropic's latest $50 billion data center plans. Meanwhile, spending continues unabated from the mega caps to the AI startup giants, but now with a new layer of complexity, debt underpinning the next leg of the AI trade. The same way cheap money fueled the .com and the housing bubbles, the AI infrastructure boom is increasingly being financed not by venture capital and profits, but by loans, bonds, securitized debt.
Once you see tons of debt getting involved, debt financing, that's a different story. Everything's more risky. Everyone's more vulnerable.
And that's what makes this moment different. The easier initial gains from hype and multiple expansion, that may be behind us as investors start to weigh the greater risk and cost of keeping the boom alive. Bank of America put out a note that tries to gauge the evolving AI trade through watch out and get out signals for past booms and bubbles. Watch out means that investors should be cautious. Get out means they should sell. It concludes that there are indeed plenty of watch-outs in the AI trade right now, like market cap concentration in the Mag 7 and AI, frothy valuations, global and retail buy-in. But they say the red flag get-out tells they aren't yet flashing. Interest rates, the analysts say, are not rising, and yields aren't spiking, meaning that the big shorts, like Michael Burry, must bide their time. Airbnb CEO Brian Chesky put it another way. He said, we're not quite yet in the mania phase of the AI hype cycle.
I think we need to be careful about excitement turning into euphoria, turning into mania. So I think if it's excitement, we should be feeling good.
Where are we in that at the moment?
We're leaving excitement. We might have left excitement.
AMD CEO Lisa Su, meanwhile, she says that from where she sits, selling the picks and shovels of the trade, demand is accelerating. People are starting to get real productivity out of the AI use cases.
The early enterprise usage was a little bit slow. I mean, people were kind of just trying to figure out what to do. But if I tell you what we've seen in the last 12 months, we've seen every one of our largest customers say, we can see the inflection point now, Lisa. Like, we can see demand is accelerating because people are now starting to get real productivity out of the AI use cases.
I sat down with 2 AI founders for their take. The first is Amjad Masad, CEO and founder of Replit. He's been at the forefront of vibe coding, or AI-first coding, a trend that has exploded over the last year or so. He admits that the hype is cooled, but there's still plenty of growth, and it's looking at free cash flow and profitability next year. He also had a take on going public that runs counter to almost every other AI startup founder I talk to these days. He actually wants to be a public company and hasn't been scared off by the hamster wheel of quarterly earnings that other CEOs and founders seem to be resisting. Amjad, it's great to chat with you again at the Cerebral Valley event. You've been coming since the beginning, right?
Yes, I remember when it was a room on a nondescript building in SF, but now this is awesome.
I know hundreds of people, great founders like yourselves. It's really turned into something which also says a lot about where we are with AI, right? This bubble forming.
I mean, if you look at the AI coding space, like 2 years ago, or maybe even a year ago, Copilot was the only game in town. They were like at 500 million ARR and revenue. If you add up all our companies in the vibe coding space and otherwise, it is maybe like 5 billion ARR. So like there's a 10x increase in revenue in this category.